morning, everyone. Welcome to the Stock Market Morning Prep video for Friday, July 17th. Well, we had a big move up in the NASDAQ. As you well aware, Netflix reported and beat earnings. Google last night came out and they rallied the NASDAQ futures well up into the after-hours session. Where do we go from here? Well, we do conclude the 3 weeks of seasonal strength in July, which I mentioned 3 weeks ago. We were looking for an average of 1.27%. We actually got a little bit over 3%, so above the norm, but nonetheless, seasonal trends actually repeat itself. So, excuse me. Now where do we go from here? Well, we are looking for now a little bit of a dip lower going into next week. Wouldn't imagine it would happen today. It is options expiration, but I looked at the open interest, and it looks like that in the ES futures contract, 2100 is going to be where they're looking for, or 2125 in the ES also has a lot of open interest up there. So it's going to be one way or the other. Maybe they tag that 2125 and then we get a little bit of a drift lower. We are up 5 days in a row, straight up, with almost 100 S&P points. 5 days ago, you couldn't even buy stocks. Nobody wanted them. Now everybody wants them. So crazy market. Nonetheless, I am looking for a little bit of weakness. Again, not necessarily today. Going into next week, going into the end of July, maybe the first week of August, maybe we get a little bit of chop, slow grind lower, and then we get one more push up where we get a lot of longs, and I think that may be some sort of a market top where we are looking for going into September, October. Remember, we're not there yet. There's not enough longs to call a market top. We need a euphoric buy, even though it looks like it's happening now for the first 4 or 5 days, and it may very well be. But at the moment, I'm not seeing that in the charts. Sentiment is still not extreme. I do look at the VIX. Now, the VIX is around 12 again. So that's a very good sign that we're getting close. Volatility is very cheap. If you are holding a lot of longs, I would suggest you buy some puts to hedge your portfolio. If not, tighten up your stops. Let's go right into the index. Here's the XLI. I've showed you this week many times. Is the industrials. It does weigh about 30%. You can see it's very weak. And even though the S&P is up, this is very weak. That's something that's a concern of mine. Also, again, the VIX being at 12, a logical spot for a bounce. Okay, that's another thing that's a concern. I just want you to be aware of that as well. Spiders. Tagging the upper end of this ascending triangle where we've been in for late February, I believe. Yes, late February. We tagged this, broke it down, broke below 200. Again, 5 days ago, you couldn't buy stocks. Nobody wanted it. Now they want to buy them at the high. So I would not be looking to buy anything up here, at least for your portfolio. Day trade something different, but I wouldn't be looking to buy anything here, at least at the moment. Let's get some sort of a pullback right into these averages here, and then maybe look for another bounce. And that's what I'm looking for, a little bit of a pullback, nothing scary, and then we get everybody long again, and they make new highs. And I think that particular time, right up in these areas where we make new highs, could be and possibly a market top going into September, October. Okay, again, a lot more work still needs to happen before that even takes place. Diamonds, you can see this here, gap up. I do think these gaps get filled, like I showed you back in the spiders. Take a look at the transports. Again, transports still breaking down. We made new highs in the NASDAQ. Transports didn't want it. They just kept on rolling over. So very weak in the transports. And this is not a good sign. Again, we will have, this will be your area, your downside target, and then we would need to reevaluate it. Russell, again, really didn't do much, didn't participate yesterday. Inside day for the last 3 days. This is our secondary leader. Was leading all of 2015, now starting to lag. Remember the higher low from these areas. Now we have a lower high from these areas, so we're starting to get this bearish symmetry of lower lows and lower highs. Something needs to be, that needs to be addressed. So just be careful here. And see where this market goes. Let the price action tell you. Lastly, you see the Qs did break out of this consolidation, made all-time highs. Does one day make a trend that we're going to go continue to go higher? Not necessarily, especially when you have a big stretch like this and you have a couple of gaps that need to be filled. I think we come in a little bit, get to these averages, and then try to make new highs yet again, making new highs, and then again, I think that market would top going into September, October, getting into a deeper correction, and then hopefully setting up for a good Santa Claus rally. Again, a little bit longer term, and it still needs a lot of work here. But just keep that in mind, because now we concluded the seasonal strength for that 3 weeks, and now we're going to come into a choppy to some sort of a slight move lower for now to the next 2 to 3, 4 weeks, where we get a push lower, and then in sometime in August, second week of August or so, we'll just kind of drift higher, grind higher into September, October, and that's where I think we get that weakness. So just keep that in mind. Keep that in the back of your head. In the meantime, watch the VIX. We have utilities here starting to look into breakout, inverted head and shoulders in the utility sector. Again, industrials do not look good. And we have also consumer staples looking to break out. So you can take a look at that yourself on the chart. Just don't have enough time here in the in our stock market morning prep video. Have a great weekend, everybody, and we'll speak to you on Monday. Take care.